All right, guys, good afternoon. Welcome aboard to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks so much for taking time out of your day to join me today and every afternoon at 5 p.m. Eastern Standard Time. No morning note today. I was hanging out with my cousin late last night, so I was a little tired. I was super tired, so I just sent out the news wire that I get from Reuters to you guys. I know it's not the same. My apologies. But again, here we are. Let's recap the day, talk about what exactly happened, some key levels, and we're going to talk about the recession word. I just had this conversation with a good buddy of mine who I used to work with back in South Florida before G.A.R Capital, obviously. And he was asking me, hey, are we getting into a recession? So again, this is somebody without any kind of economic background, and I had to kind of break it down. And I wanted to break down that a little bit today. So we're going to kind of keep that focus. The recession, is that going to happen? Well, we'll know a little more information by tomorrow. We'll have the CPI data. This is a consumer price index, month over month and year over year readings, if that's correct, core and regular CPI readings. That's at 8:30 in the morning. We'll go over that number together afterwards on the morning note, 9 a.m. Eastern Standard Time. I'll be there. Just in case you miss anything, make sure to hit that bell button notification so you don't miss a video, and more great things to come. Let's go over it. Dow went down 638 points. Last 2 hours of the session were the rough ones, and we're going to go over that level here. Nasdaq down 2.75%. Definitely came down most amongst the majors. S&P down 2.38%. I have the SPX chart up here. The VIX up nearly 8.9%, 2609 handle, still below 30. Not a lot of fear out there, but again, a spike. Equal weight S&P fared better than the regular S&P due to tech. Small caps did hold their own, down 2%. Dollar index gained nearly 1%. There you go. That's kind of your risk averse there. The dollar index. Again, that's the basket versus other currencies. We have the ECB reading ECB today. They're going to raise rates. Euro dollar. Let's take a look at it real quick because it matters. Look how much that fell. Looks pretty similar to the S&P, right? If we can kind of compare both charts, that's the euro dollar right there. So again, forex does matter. I do forex as well, so keep an eye on that. In terms of, let's take a look at bonds. TNX 10-year yields 3.044. So yields are going higher. So that's what's hurting the market too. So the dollar and the yields, those are your tells. We were kind of coming down a little bit, and then we accelerated towards the end of the session, up to 3.04%. Our recent high is 3.16%. Let's see if we do get there. If we kind of reject that, maybe that can indicate a short-term bottom on, let's say, tech, NASDAQ, or for example. Gold came down today as well. So not really much places to hide. How about this? Bond yields are up, but TLT, the 20-year bond note, which I own, was up today. It's kind of weird, right? Rates were up, yet bond prices were up. Interesting. High yield credit down 0.80%. Again, I talked about this yesterday. When the Nasdaq was going up, HYG was not helping, was not doing anything with it. They were not going up with it. So again, since that decoupling we talked about on Instagram, watch that. Look at that slide I did on Instagram a couple of posts ago. HYG, you can see high yield credit kind of getting back down to a very key support level on the daily. You can see it right here. We hit the lows of around 75.87. Very similar time to the bottom of the S&P, the most recent one, which was around 3,800. And you could see that we're maybe retesting 76.70, which was the recent bottom based on the daily. So again, credit matters. Even though government debt was up in terms of value, but high yield credit, that's a big risk factor, and that's not coming up. So again, that needs to go higher. High yield credit, liquidity for smaller companies, that's important. In terms of investment grade bonds, it did take a hit as well. You can see pretty much a similar pattern. Investment grade are higher credit rating companies, Johnson Johnson, Microsoft, for example. So again, does it matter to these really cash heavy companies? Well, yeah, it does hit their bottom line. So when bond prices go lower, interest rates go higher for these bonds. So it costs more of these companies to service that debt. So that's important. That's important to the balance sheet, and that does hurt EPS. Let's take a look at crude oil. Crude oil down 0.58%. Not exactly a great day for oil, but again, holding above the 23.6 Fibonacci level, still trekking higher. Energy was down today too. It's not like they had a great day at all. Energy was down about 2.25%. Let's take a look at the sectors. Technology being the biggest miss, biggest down. Basic materials down. Cyclicals, pretty much nowhere to hide other than consumer defensives, which fared a lot better. In a 1 week relative performance from Thursday to Thursday, energy is the only thing that's green. In a 1 month performance, again, you could see that consumer defensives being a little overheated in terms of evaluation. They came back down. Target, Walmart kind of hurting that also. But energy up 14% in a 1 month relative speaking. How about year to date? Energy leading the pack 45%. And again, it's nice to see that, but again, it doesn't last forever. And again, I own energy. It's not like I don't. Again, I'll wait for a pullback and see if I can get into some energy stocks, maybe at a lower valuation. We went over XOM in terms of overbought, and XOM today was down. Remember, we talked about that. Take a look at XOM. We'll add the studies. We'll add the RSI. Let's go to momentum studies. Now, again, I'm not big into RSI either. I can't say I use it every day, but you could see we were at a point here on XOM that we were overbought on Wednesday. Look at that on the hourly, and then it came back down. So let's take a look at the 2-year. We were high as can be at 105.57, and then it came back down. Now we're slightly below overbought. It matters. It matters what you pay for, like we talked about. Again, it doesn't mean XOM is a bad company. It just got a little too hot too quickly. And that's normal. That happened to crypto. That's going to happen to real estate. Yeah, you'll get a pullback in prices. There's always cycles to this thing. Gold futures were down 0.31%. Silver down 1.8%. We went over Forex with the euro dollar. Bitcoin futures, interesting, still above 30K. Why is that still holding 30K? Remember, we talked about that 30K level. That's kind of that pivot point. If it can hold above, that's a good sign for those who are want a little more risk. You can kind of use ARKK as a kind of analog, but Bitcoin holding up 30K. Very interesting, because I expected us, if that break, we'll get down to 20, retest those 2017 highs. So far, it is holding Bitcoin right now. We'll take a look at futures together. And Bitcoin on the daily chart, again, hourly chart, just range, nothing happening whatsoever. I'm still dollar cost averaging. Bitcoin is not at oversold, obviously, but we're right towards the bottom end of the range. Between 70 and 30, we're at 43. So we're closer more to oversold than overbought. So does that mean a buy signal? No, not exactly. But again, you're getting to the point where, oversold on the weekly and a lot of charts oversold. Now, they could stay oversold or be oversold, sure. It's all about timing. But at the end of the day, it's a whole lot of nothing since for about 30 days on Bitcoin. So all the holders are just holding. And that's interesting because, again, this is a very big risk proxy where, again, Bitcoin crypto being the most riskiest asset out there, obviously, not in terms of liquidity, but in terms of volatility. Yeah, it kind of it's a point of emphasis to see that the most riskiest asset is not moving. It's not moving for a month now. Why? But we've seen volatility on the NASDAQ. And we've done those comparisons with the NASDAQ futures and what do you call this? Excuse me, and Bitcoin. But let's take a look at NASDAQ futures together really quickly. Oversold. Every time we've hit an oversold level, we have gotten a bounce of some kind. Could CPI SPY G? I bought SPY G today. Could CPI give us a short squeeze? That's a probability. I sent that over to the blog and I said, we could be getting some front running ahead of the CPI number, or it's just that bad that someone got some kind of whisper. I'm leaning towards more people are just taking risk off the table ahead of such a big event. That makes a lot of sense. Now, what happens then? I have no idea. We have to know, because there's no such thing as absolute, guys. They're just a number. It's all about the reaction to it. It's all about the reaction towards the number. So let's take a look at NQ here really quickly. Again, at oversold. We talked about this in terms of XOM last time. What happened today? Oversold. Now, this is an hourly chart. So let's go to a daily chart, and we can see that on the daily, NASDAQ futures is nowhere near oversold. Same as the daily. But on an hourly basis, if you're a trader, I expect a bounce. I know I've been saying that, but all we did is retest the breakout, the second leg of the breakout. We were chopping in a zone for a little bit. Could we get back to 305 tomorrow? Absolutely. Could we break down? Now we're going to see something interesting before we get into some question and answer and talk about the recession word. 417 on SPX. This is the cash spot for SPX. This is the index. Think of it as the Dow, right? This is not a tradable security. This is just the index. 500 broadest companies, they are weighted. 4017, right? Here's a gap to fill. Look at that gap. Small one, but this is the only downside gap we have not filled. And I want to give thanks to Nick for showing me this gap here on SPX. 3980 would be your first target to short. If you're looking to short post CPI, 39.80 is your level. Now, again, maybe we get a bounce towards Asia. Maybe we get to around 40.35. I think that's the highest we'll go in terms of overnight. We're talking about SPOOs, yes, S&P futures. But that 200-day was broken. Again, 39.80 seems to be happening in terms of CPI. We could fill that gap in the morning and then bounce as well. Or once we fill that, we can start getting down to around 38.85. And again, if you've been watching me on the note, if we're on the Discord, I've been saying that I think we're going to roll over after 4,300, but we didn't get to 4,300. We got to 41.77. So I was expecting that rollover. Again, 3,800 is a key. If we can retest 3,800 and hold there and bounce from there, that's a very strong indicator because we retested and we've bounced. That would give me a lot more confidence that that's more of a short-term bottom or a bottom of the market than anything else. So again, this is my mentality. Dude, if you're just gonna rip the bandage, rip the bandage. Just get me out of it. Just rip it. Let's just do it. Let's just see what happens. But if we just kind of hold on to this chop that we've been having, that's just premium killing. And this week has been one of the worst weeks of mine trading in options. Futures I did okay, and Forex I did okay, what the team did, but I didn't trade the Forex. But in terms of options, this was all premium killing. Premium killing. And I'll eat it. I mean, sometimes we have bad weeks, sometimes we have bad days. I'll eat it. That's just the nature of the beast. But we just have to keep fighting. And that's what I'm going to do tomorrow. CPI will give us a lot more direction. Next week we have FOMC. Next week we have PPI. It's going to be a big time week, and I'll be ready to do it. So the best I can do is seeing what's next. All right, let's go and answer some questions. Javier says, thanks for the analysis as always. Thoughts on O? I think that's O Realty, the realty company, Realty Income Corp. Again, if you're long real estate, you can't. It's not really bad. I don't know in terms of the yield because that's pretty much all you're owning it for. For real estate, and I believe this is commercial. I do like REITs. I do, and O is one of the better ones. I think SPG is a good one. Simon Property Group is a good one if you want to get into commercial. But I personally use Javier. I use Fundrise, and Fundrise does a little more residential and commercial, but leaning more towards the residential. And I like that. And Fundrise, I've done pretty well. I haven't really checked it lately, to be honest. But O isn't a bad buy here. I think they're fine. Again, you're just getting chopped and you're owning it for the yield. You're owning it for 4.47% yield. So again, if you kind of temper your expectations, this is not a growth company, then O is fine. Well, do you DCA and Ether as well? I do. I do in Ethereum. I do it in Bitcoin. What was the other one I do? The Graph. And I also do Tezos. And God, I forget the other one. It's Tezos. Let me go and take a look. Tezos, Stellar, Polygon, and Shiba. So I've kind of done the same thing like I did before, and I just let it go. I treat it like a bill, to be honest with you. And I bought some more SpyG today. I do that every week. In terms of big time buys of stock, no. I'm still waiting for see if we can retest 3,800. Again, 3,750 has been my level. Again, that matches up in terms of PE multiples with a 3% yield, which I think we kind of hover around 3% anyways. If I'm wrong, then so be it. I will see where we go from there. But 3,750 is kind of a nice target for me where I want to, let me go and edit studies and remove this lower band. Here we go. And that's where I personally want to buy some stock at 3,750 S&P futures. That's 50 points below the actual 3,800 bottom that we had, 3,807. You can see it right here. We had a double bottom there on the wick, and then we broke below. So could we get there? Sure. That's when I would want to go ahead and buy because valuations have come down, which is good. Prices come down. The E part, the earnings. The next earnings cycle is going to tell us a lot. That's the make or break in terms of recession where everyone's talking about it. And I told them, you can't have a recession in this kind of jobs market where everyone's hiring. By definition, we know recession means 2 consecutive quarters of GDP decline, right? I think we're more towards the slowdown side than we are a full-blown recession side. Yes, oil prices are higher. And I explained this in a very easy manner. I said, it's all supply and demand. We have too much demand. And again, I talked about this many times on the video. The Fed cannot control supply. So what they did, and their mandate is to control inflation. And all they could do here is raise interest rates, and that will kill demand. 70 to 80% of our economy is based on one thing, the consumers to spend. Now we've pivoted. Now Target has excess inventory on clothing. Walmart has excess inventory. Why? Because we've pivoted from buying stuff to doing stuff. Now we're traveling. Remember, everyone's going back to work. The grand reopening. What did you expect to happen? What do you expect to happen? Everyone's going to use more of the supply, which was very limited as is. The big wild card, in my opinion, looking back to the market, if anyone remembers this, I thought we hit a bottom back in, what was at the bottom here, was the Russian invasion lows from 41.01. That was my level. Even before that, I was like, oh, now we'll get above 42.52. That's going to be the low for the year. But the Putin invasion of Ukraine really changed a lot because now they have oil stored. Ukraine has wheat stored. So the supplies are there. It's just they're in a conflict. And then the Eurozone is hurting. Australia is hurting. New Zealand's hurting. China's hurting. Canada. It's not just the US. I mean, ask anyone around the world. Inflation crunch is happening to everybody. It's just when you have 2 years or a year and a half of lockdown, you just can't flip the switch on the factories when those factories have to report to shareholders on why they have excess inventory, why do they have excess product. That's a tough one to really defend because then your margins go lower. Now that you're an energy company, if you remember back in 2020 when oil prices were low, no one was driving, everyone was home. Yeah, if you're an oil executive then, it was very difficult to trek. All they're doing, in my opinion, the oil companies are doing now are just making up for 2020 and 2021. The biggest beneficiaries being the shareholders, not the consumers. The oil companies are not there for your benefit. They're there to make money. And they didn't make money in 2020. They didn't make money in 2021. They made money now, but you guys weren't crying for them then. So that's kind of the mentality in the business aspect. But again, demand being so high, yes, I've seen consumer credit go higher. I saw the report on Bloomberg. Yes, it is higher. But again, the demand is there for goods and services. By definition, if you have that high demand, you can't be in a recession. You will have in high inflation. Sure, you're talking about in terms of growth. Will it slow down? Yeah. A lot of people have said stagflation. Well, if it's stagflation and we're back to 1981, that's even better in my opinion because they got out of that in 82, 83. So it was quick on that one. Now, are we going to raise rates the way Paul Volcker did, who was the Fed chairman back in 81? Possibly. But if anyone remembers the 80s or you're maybe a student of history, right after that recession, 81, 82, 82, 83, 84, 85, 86, we had 5 straight years, 6 straight years until the crash of 87, which was made up, and we got to 91. So again, guys, it's all cycles. And I was explaining this to a good buddy of mine who knows nothing of economics, is that you have cycles. That's just how it goes. It doesn't last forever. And again, I'm not saying we're going into depression, but you can have slowdowns. This is no different than 2018 in December. I remember trading through that with that Fed hike. I remember 2011 very vividly. I remember 2014 very vividly. And I'm sure you remember 2020 very vividly. It doesn't last forever, up or down, up or down. So if you have that kind of perspective, you can really see how the market functions. All we did right now is break through a range to the downside. Sure, now we could retest 4,000. And if we do and we hold up, that's a good sign. If we don't, well, then we're going to go lower to 3,800. Now, again, it's a very simplistic way to view the market, but at the end of the day, the biggest spike we had was toward the tail end of the day, again, in that liquidation or that sell. The highest one we had was on Monday at 2 p.m. But granted, you could see the volumes on the blue lines here. Not that high. Not that high, guys. Very low volume in June. So again, your moves will be more violent because there's less volume out there. You could see it back in Thursday and Friday of last week and the end of the month of May. It works both ways. That's all you have to see it as. You got to put yourself in a position to catch it and go from there. So I know it was a lot today and there's a lot to explain. Please feel free to replay this, rewind it. It'll always be on YouTube. Have a great rest of your afternoon. I will catch you guys for CPI tomorrow at 9 a.m. We'll go over the number and see how the price action goes. Friday afternoon, I have to go to a wedding. So the wedding's on a Saturday, but again, Friday I have to leave. So no aftermarket recap on then. I'll send the Reuters report to you guys on Instagram. Hope you guys enjoy it. Thank you, Jason. Thank you, Javier, for your questions. Have a great rest of your day, all. Make sure to hit that like button if you like these videos. Tough trekking, guys. I know. It was a horrible week for me. But again, tomorrow's another day. We fight another day. And just like basketball players have bad games out there, if you watch the NBA Finals, same exact thing. But you keep shooting. Have a great one, guys.